There has been a lot of talk about what investors are now able to see when opening their new annual investment reports. Not to be confused with your quarterly statement, annual reports are mailed out just once a year, typically at the beginning of the year. For those who have received an annual report, understanding all these numbers can be a bit overwhelming. It's important to note that these reports can vary from firm to firm in appearance, as well as on when they decide to mail them out. Some firms, such as TD Bank and Investors Group, do mid-year reporting, so clients of those firms may not receive their annual statements until after June. But the two main takeaways in your new reports is that you will now be able to have a better understanding of how your investments are performing, as well as how much you are paying for an investment in dollar terms. To start, here's the three main points you should be looking for when it comes to account performance. The changes in value to your overall account. A chart of some sort to display a visual on how well your account is doing. This can vary between firms, so you may see a bar chart from one firm and a line graph in another. And lastly, you are going to see your rate of return. When looking at your changes in value, you will now be able to see the changes you made to your account. So this is going to include all the money deposited into the account, as well as any funds withdrawn. What the market did. This is the change in value caused by the markets and will show how much you made or lost as a result of being invested in the market. Closing value. This is the total value of your account. That value is after all fees have been deducted. And lastly, your performance report will show your average annual rate of return in a percentage over several time periods. This is depending on when you opened your account and how far back your firm can accurately do this calculation. Now on to investment fees. The big question many have been anticipating is how much am I paying for the servicing of my account, including the financial advice I receive? Typically, these fees have been discussed in percentage terms, but now that fee has to be reported in dollar terms. Depending on the type of account you have, whether you are a fee-based client or a transaction client, the amounts and the categories they show will vary. But the key takeaways are the same. Here's an example. For a transactional client, you will see how much you paid in account-related operating fees, like your fixed annual administration fee, separate from the total transaction-related fees you paid for trades. For a fee-based account, which typically is around 1% of the assets in your account, you will now see that amount in dollar terms. In many cases, there will also be a third section for fees that you did not pay directly, but were received by your financial firm from other parties, like mutual fund companies. These payments are known as trailing commissions. While these payments aren't taken directly out of your account, it's important to understand the amount your firm, some of which is shared with your financial advisor, is being paid to sell these funds. In the case of mutual funds in particular, there's still one piece missing from these reports to explain the full cost of investing, and that is the management expense ratio, or MER. These fees can be found on every fund fact sheet you receive when purchasing a fund.